Welcome to our Summary of Money, Master the Game by Tony Robbins. In this book, Tony Robbins takes readers on a journey toward financial freedom. He explains that the goal isn't just to accumulate wealth, but to use money to create a fulfilling life. Drawing from his experience as a life and business strategist, Robbins has worked with many high-profile clients, including U.S. presidents and successful entrepreneurs. He shares the strategies of 50 of the world's top financial minds. Robbins aims to make this valuable financial knowledge accessible to anyone who wants to achieve financial independence and live on their own terms. He presents the book as a guide to help readers navigate the financial world and master their relationship with money to achieve their dreams. In the first section, Robbins introduces the idea of financial freedom. He explains that it's not just about piling up wealth, it's about gaining control over your financial life and using money to create a lifestyle that reflects your values and dreams. He outlines 7 simple steps to achieve this, starting with the decision to take control of your financial destiny. Robbins emphasizes the importance of making informed choices about your money and investments, instead of following common financial myths or others' advice without question. This section also explains the power of compounding, showing how even small, regular investments can grow significantly over time. Robbins shares stories like that of Theodore Johnson, a UPS employee who built a fortune through steady saving and investing, to highlight the importance of starting early and sticking to a solid financial plan. He encourages readers to let go of limiting beliefs about money and adopt a proactive approach to building a secure and prosperous future. In the next section, Robbins tackles the 9 financial myths that often mislead investors. He argues that the financial industry often distorts important information, leading people to make poor financial decisions. He starts by debunking the myth that actively managed mutual funds consistently beat the market. Research shows that most active funds fail to outperform market benchmarks over time because high fees and transaction costs eat into potential returns. Robbins then reveals the hidden fees in mutual funds, which are often much higher than disclosed. Over time, these fees can significantly reduce an investor's returns and derail their financial goals. He explains the difference between time-weighted and dollar-weighted returns, showing that the advertised returns of mutual funds often don't reflect the actual gains investors experience due to the timing of contributions and withdrawals. He also exposes the conflict of interest in broker-client relationships, where brokers are often motivated by commissions to sell products that might not be in the client's best interest, leading to poor investment choices. The over-reliance on 401k plans as a retirement solution is another myth Robbins challenges. He points out the high fees, limited investment options, and potential conflicts of interest that can hinder the effectiveness of 401k plans in securing a comfortable retirement. He questions the suitability of target date funds, marketed as a hands-off retirement investing approach, noting that these funds might not be suitable for everyone due to varying risk profiles and hidden fees. Robbins suggests that investors consider their individual needs and risk tolerance before choosing these funds. Contrary to the common dislike for annuities, Robbins explains that while some have high fees and restrictions, certain types like fixed-indexed annuities offer benefits such as guaranteed income and principal protection, making them useful for retirement planning. He debunks the idea that high returns require high-risk investments, advocating instead for asymmetric risk-reward strategies, where the potential gains far outweigh the risks. He introduces financial instruments like structured notes and market-linked CDs that offer substantial rewards with minimized risk. Lastly, Robbins addresses the internal barriers to financial success, limiting beliefs, negative self-talk, and fear of failure. These psychological obstacles often prevent people from taking action toward their financial goals. He emphasizes the need for an empowering mindset and taking control of one's financial decisions. By dispelling these 9 financial myths and offering alternative insights, Robbins provides readers with the knowledge and tools to make smarter investment choices, navigate the financial world confidently, and move closer to financial freedom. Transitioning from understanding financial myths to actionable steps, Section 3 dives into practical strategies for achieving financial goals. Robbins starts by encouraging readers to define the price of their dreams, which means figuring out how much money is needed to achieve financial security, independence, or freedom. While these numbers might seem scary at first, Robbins reassures readers that their goals are more reachable than they might think. He talks about 5 levels of financial dreams, each representing a stage of financial well-being. The first level, financial security, involves covering essential living expenses like housing, utilities, food, transportation, and insurance without needing to work. Next is financial vitality, where you have extra money for leisure activities, travel, and personal interests. Financial independence means having enough passive income from investments to maintain your current lifestyle without working. Financial freedom allows for big future goals, like buying a vacation home or making large charitable donations. The highest level, absolute financial freedom, means being able to achieve any dream at any time without worrying about money. Robbins guides readers through exercises to calculate the income needed for each level, emphasizing that knowing these numbers is crucial for setting realistic goals and making a practical plan to achieve them. He outlines key strategies to speed up the journey toward financial freedom. One method is saving more and investing the difference by adjusting spending habits and automating savings. He highlights the power of compounding, showing how even small, regular savings can grow a lot over time. Robbins also encourages focusing on increasing income by providing more value in the marketplace, sharing examples of people who have succeeded in various ways. He stresses the importance of minimizing fees and taxes, which can eat into investment returns over time, and offers strategies to reduce investment expenses and optimize tax efficiency. Robbins introduces the idea of asymmetric risk-reward, where the potential reward of an investment is much higher than the risk. He talks about investment options like structured notes and market-linked CDs, which offer the chance for big gains with less risk. Additionally, Robbins suggests moving to a more affordable area or making lifestyle changes to free up more money for saving and investing, speeding up the path to financial freedom. By following these strategies, Robbins believes people can achieve financial freedom and reach their dreams sooner than expected. He emphasizes that the journey isn't just about reaching the destination, but also about enjoying the process and making choices that match one's values and goals. Moving on to Section 4, Robbins dives into the important concept of asset allocation, which is key to long-term investment success and financial well-being. He explains asset allocation as the strategic distribution of investments across different asset classes like stocks, bonds, and real estate. This approach isn't about randomly spreading investments, but thoughtfully aligning them with an individual's financial goals, risk tolerance, and investment tailored timeline. Robbins stresses that asset allocation is the foundation of successful investing, allowing individuals to optimize returns while managing risk effectively. He introduces the idea of 2 main investment buckets, the security bucket and the risk growth bucket. The security bucket is meant for assets that prioritize preserving capital and providing peace of mind, such as high-quality bonds and cash equivalents. These investments might not yield high returns, but offer stability, especially during volatile market conditions. On the other hand, the risk growth bucket contains assets with higher growth potential, but also higher volatility, like stocks and real estate. These investments carry more risk, but offer the chance for significant appreciation over time. The allocation between these 2 buckets depends on individual circumstances, like age, risk tolerance, and financial goals. For instance, younger investors with a longer time horizon might allocate more to the risk growth bucket to capitalize on long-term growth potential. Conversely, those nearing retirement might focus on the security bucket to protect their accumulated wealth and ensure a stable income. Robbins also emphasizes the importance of diversification within each bucket. Even within the security bucket, it's wise to consider a mix of different types of bonds to spread risk. Similarly, the risk growth bucket should contain a diversified portfolio of stocks across various sectors and regions. This layered diversification strategy minimizes the impact of any single investment's poor performance on the overall portfolio. Beyond asset allocation, Robbins briefly touches on market timing, acknowledging the temptation to predict market movements for maximum gains. However, he cautions against relying on market timing, as it's notoriously difficult to do consistently. Instead, he suggests strategies like dollar cost averaging, which involves investing a fixed amount regularly, regardless of market conditions, to mitigate the risk of mistiming the market. Robbins concludes this section by introducing the dream bucket, a unique concept encouraging individuals to allocate a portion of their investments toward fulfilling their aspirations and enjoying life's experiences now. He emphasizes that financial planning shouldn't only focus on future security, but also allow for present enjoyment and fulfillment. The dream bucket serves as a reminder that financial goals should ultimately enhance one's quality of life. Moving into Section 5, Robbins focuses on creating a lifetime income plan that can weather any financial storm, ensuring financial security and peace of mind. He emphasizes that the ultimate goal of investing is not just to accumulate wealth, but to generate a reliable income stream that lasts a lifetime, covering all needs and desires without the constant worry of outliving one's savings. He introduces Ray Dalio's all-season strategy, a unique portfolio approach designed to thrive in any economic condition, whether it's high or low inflation, or high or low economic growth. This strategy involves diversifying investments across various asset classes that react differently to different economic scenarios. For example, stocks might perform well during periods of economic growth, while bonds can offer stability during deflationary periods. By strategically spreading investments across these different classes, the all-seasons portfolio aims to minimize losses during downturns while still capturing gains during periods of growth, keeping the portfolio balanced and resilient regardless of market fluctuations. The all-seasons portfolio, a simplified version of Dalio's strategy tailored for individual investors, typically includes a mix of stocks, bonds, commodities, and gold. This diversified approach aims to reduce the overall risk of the portfolio while providing balanced exposure to different asset classes. Robbins highlights the impressive historical performance of the all-seasons portfolio, noting its ability to generate consistent returns with lower volatility compared to traditional strategies heavily weighted towards stocks. He presents data showing that over the last 40 years, the all-seasons portfolio has yielded an average annualized return of nearly 10%, with positive returns in 85% of the years. Even during the 2008 financial crisis, when the S&P 500 dropped by 37%, the all-seasons portfolio experienced a minimal loss of just 3.93%. Robbins also explores the concept of income insurance, emphasizing the importance of securing a guaranteed lifetime income stream, particularly given the increasing life expectancy and unpredictable market volatility. He discusses various financial instruments, including annuities, that can provide reliable income throughout retirement, allowing individuals to enjoy their golden years without the fear of outliving their savings. He particularly highlights fixed-indexed annuities, FIAs, as a powerful tool for generating income while protecting against market downturns. FIAs offer a unique combination of principal protection, the potential for market-linked gains, and guaranteed lifetime income, making them an attractive option for those seeking financial security in retirement. Additionally, Robbins delves into the secrets of the ultra-wealthy, discussing strategies like private placement life insurance, PPLI, which allows high net worth individuals to grow their wealth tax-free. While PPLI is typically accessible only to accredited investors, Robbins mentions a similar product offered by TIAA-CREF that is available to non-accredited investors with smaller investment amounts, making this tax-efficient wealth-building tool more accessible. Section 5 of Money, Master the Game helps readers create a strong lifetime income plan that can handle economic ups and downs, ensuring financial security in retirement. By using strategies like the All Seasons portfolio, considering annuities, and exploring tax-efficient methods like PPLI, people can make big progress toward their financial goals and enjoy a worry-free retirement. In Section 6, Tony Robbins interviews 12 highly successful investors, giving a rare look into their minds and strategies. These talks reveal valuable insights into their investment philosophies, risk management approaches, and guiding principles that have made them wealthy and influential. One standout interview is with Carl Icahn, known for his aggressive shareholder activist style. Icahn focuses on undervalued companies and pushes for changes that increase shareholder value. He stresses the importance of strong corporate governance, accountability, and aligning management's interests with those of shareholders. His approach relies on deep research to find opportunities for improvement and uncover hidden value in companies. David Swensen, the Chief Investment Officer of Yale University's endowment, shares his unique approach to institutional investing. He supports a diversified portfolio strategy that includes alternative investments like private equity, real estate, and natural resources. Swensen believes in a long-term investment horizon, disciplined asset allocation, and minimizing fees to get the best returns. John C. Bogle, the founder of Vanguard Group, supports index funds and passive investing. Bogle argues that most investors do better with low-cost, broadly diversified index funds that track the market rather than trying to beat it through active management. He highlights the importance of minimizing fees, which can greatly reduce returns over time. The legendary Warren Buffett, often called the Oracle of Omaha, shares his simple yet powerful investment philosophy. Invest in high-quality companies with strong competitive advantages and hold them for the heads for the long term. Buffett supports value investing, looking for companies undervalued by the market, and emphasizes keeping fees low and avoiding excessive trading. Paul Tudor Jones, a successful trader, talks about his disciplined approach to risk management and protecting capital. He highlights the importance of diversification across and within asset classes. Jones shares his 5-1 rule, looking for investments with a potential reward at least 5 times the risk. Ray Dalio, founder of Bridgewater Associates, introduces his all-weather portfolio strategy designed to do well in any economic condition. This strategy spreads investments across asset classes expected to react differently to economic changes, like inflation, deflation, economic growth, and recession. Mary Callahan Erdos, CEO of J.P. Morgan Asset Management, gives insights into institutional investing and the value of active management. She emphasizes the importance of experienced portfolio managers navigating complex markets and making informed decisions. Erdos supports a balanced approach to risk and return, tailored to individual client needs and goals. Energy tycoon T. Boone Pickens shares his experiences in the energy sector and his views on energy independence. He stresses hard work, education, and giving back to society. Pickens focuses on finding and investing in undervalued energy assets. Kyle Bass, known for his successful bet against the subprime mortgage crisis, emphasizes opportunities where the potential upside greatly outweighs the downside risk. He highlights the importance of thorough research, independent thinking, and making decisions with limited information. Mark Faber, a contrarian investor, is known for his bearish market outlook and focus on undervalued assets in overlooked markets. He supports diversification across asset classes and geographies, buying assets when they are out of favor and prices are low. Charles Schwab, founder of Charles Schwab Corporation, talks about empowering individual investors with accessible and affordable investment options. He values technology for making financial markets more accessible and providing tools for informed decision-making. Sir John Templeton, a pioneer in international investing and philanthropy, shares his philosophy of value investing, patience, and global diversification. He emphasizes long-term thinking, thorough research, and staying positive during challenging market conditions. These interviews offer a wealth of knowledge and diverse perspectives on investment strategies, risk management, and the mindset needed for financial success. By learning from these accomplished individuals, readers can gain valuable insights to navigate the financial world, make informed decisions, and achieve financial freedom. In Section 7, Robbins shifts the focus from simply accumulating wealth to taking action, enjoying the process, and using resources to create a positive impact on the world. He emphasizes the importance of embracing the future with optimism, noting that technological advancements will continue to enhance our lives and unlock new opportunities. Robbins encourages readers to adopt an abundance mindset, recognizing that technology can solve many of the world's biggest challenges, from resource scarcity to complex healthcare issues. Next, Robbins explores the concept of the wealth of passion, saying that true wealth is more than financial success. Genuine wealth comes from pursuing passions and making meaningful contributions to society. He shares personal stories and inspiring anecdotes of people who found fulfillment and purpose through their work and dedication to making a positive difference. These stories show that financial success is just one part of a truly enriched life. Robbins then discusses the final secret to wealth, the act of giving. He explains that giving, whether it's time, money, or expertise, not only benefits others, but also brings joy and fulfillment to the giver. He urges readers to find ways to give back to their communities and support causes they care about, highlighting how even small acts of generosity can have a big impact. Robbins cites scientific research showing that giving is not only selfless, but also a source of personal happiness and well-being. He concludes this section with a passionate call to action, reminding readers that knowledge alone is not power. It's the application of knowledge through action that transforms lives. He encourages them to embrace the journey to financial freedom with enthusiasm, find joy in learning and growing, and use their newfound wealth to make a positive and lasting impact on the world. This call to action serves as a powerful reminder that financial freedom is not the end goal, but a means to a more fulfilling and purposeful life. If you enjoyed this summary, don't forget to like, comment, and subscribe to our channel. Your support helps us bring you more insightful book summaries and practical advice. Stay tuned for more content that can help you achieve your financial goals and personal growth. Thanks for watching.